This is the History Lessons Podcast with certified financial planning practitioner, Patrick Huey.
Guys, and welcome to another episode of Your Financial Future Friday. Today, we're going to be talking about 2023 tax planning activities. Now, if you're like me, October 15th is a big day as it's the last day to file your 2022 taxes on an extension, which means that taxes and tax planning are now a year-round activity. So what is tax planning and why is it important? Well, tax planning is the process of anticipating and managing your tax liability so that you pay the least amount of tax over the lifetime of your plan. And it involves looking at your current financial situation, also making changes to reduce your tax burden potentially in the future. And it also means preparing your next filing. It's important because it can save you money, right? By reducing your tax liability, you'll have more money left over to spend on other things like golf clubs, fishing gear, or a nice dinner out. When should you do tax planning? Well, the best time to start tax planning is now. By starting early, you have more time to make changes to your financial situation and potentially reduce your tax liability. And as I said at the outset, this is now a year-round activity. So, what are some 2023 tax planning activities that you should be looking at? Well, there's a checklist for this. First of all, two of them actually, so check out the show notes. One is for those who are still working, and one is for retirees. They're both in the same download. Again, check the show notes for this episode and follow the link to get that checklist. But here are some planning activities that you can think about doing. Okay, number one, review your tax return. Kind of a no-brainer there, but taking a look at your 2022 return is going to allow us to see where you have differences. Okay, for example, if you had a lot of deductions last year, maybe you went over the standard deduction amount, but this year some of those deductions are curtailed. Well, those transitory deductions going away, all else being equal, may mean that your taxes will go up in the future. You can also estimate your income and taxes, and this is a tricky one for a lot of people. Estimating your income for this year can make sure that you're paying the right amount. Think about withholding, either on retirement distributions or on your paychecks. And you can use a tax calculator to help with this. But if you really want to be accurate, find an advisor like me who actually does tax planning. Okay? You need to make sure that you're being accurate with your projections, and it's something that we can help with. Make sure you're taking all the deductions that you're eligible for. And here we're really talking about the difference between the standard deduction and the itemized deduction. Okay? Make sure you're taking everything that you can to reduce your taxable income. And think about deductions like property taxes or charitable gifts to get over the standard deduction in given years. Again, it's part of a tax plan where you can look forward and say, you know, I want to bunch up a bunch of deductions this year, put myself over the standard deduction, put myself in a certain tax bracket and average tax rate, and then know how that's going to help you not only this year, but in future years. Always consider tax advantage savings accounts. Tax advantage savings accounts like 401ks and IRAs can help you save money for retirement and reduce your tax liability. But you can also consider converting from a traditional to a Roth retirement account to save yourself future taxes. If you project that your tax rates will be going up sometime in the future, it may make a lot of sense to lock in those taxes now at a lower rate, make your conversion, and then keep those monies invested in a more tax-advantaged account for their lifetime. You can consider some traditionally tax-efficient investments. Now, tax-efficient investments include things like individual stocks and certain bonds that may, and I'm going to stress may, help with your taxes. But I always urge people not to let that tax tail wag the investment dog. While some of those investments may help with taxes, they may not help with your overall investment plan. So it's the interplay between the two that is going to be important. And you need to consider things like asset location versus that asset allocation. Allocation is the mix of your overall portfolio. Asset location is where you put things in which types of accounts to maximize their taxable nature or the nature of their taxation. It's getting towards the end of the year, so make sure you're harvesting your capital losses. If you've got losses in your portfolio, now's a good time to consider selling some of those, harvesting them, reducing your taxable income and or your total capital gains for the year. It's also a good time towards the end of the year to think about your charitable donations. Charitable donations can help you reduce your taxable income, provided that you're going to go over the standard deduction when you make those charitable donations. So again, consider bunching future years into one. See my video from 2 weeks ago, I think it was, where we talked about donor advised funds, which are a good way to do this. Bunch future years charitable donations into 1 year's tax deduction. But you can also do this with things like property taxes. So keep that in mind as well. Plan for your estimated tax payments. Okay, avoid getting penalized at the end of the year. But again, this takes planning and estimates. And guess what most CPAs and tax preparers don't do? They don't do estimates. They don't do planning. They don't do tax planning. They really only are filing your taxes for you in most cases. Now, if you've got one that does these types of proactive plans, great. Hold on to them because they really are rare. But if you need this type of information, my recommendation is to go find somebody who can do it for you. Contact me. My contact information is in the show notes, and we might be able to help you. Now, tax planning is an important part of financial planning, and it's ever present and it's always necessary these days. We want you to be able to try to save yourself some money, reduce your stress levels. And for my clients, we want to create clarity and confidence where previously there was anxiety. Thanks for checking in on this episode of Your Financial Futures Friday. If you have any questions about tax planning, first download the free checklists in the show notes. One, again, is for the working stiffs and one for those lucky retirees out there. Or leave a comment in the comments section below where you're getting your podcasts. Or just reach out to me. Again, my information is in the show notes for every episode we publish on all of our platforms. Thanks for watching. Have a great weekend.
See you next week.